I think it was something along the lines that, if we were to rebuild the Cash App product today, we would build it on top of stablecoins. And again, it goes back to my previous point. Stablecoin is infrastructure, I think, and infrastructure has to be customized and you have to have your own kind of piece on top of it. So it's not, I think people are getting confused about this idea of, having 1,000 stablecoins. Think of it as more like having 1,000 AWS instances. Yeah. You will need these things, and that's how people end up going to build these products. I think this is a first step, and I'm excited to see a product as large as the Cash App, again, joining the fray. And I think this is only one more in a long list that we have seen and will see.
Welcome to Tokenized, the show focused on stablecoins and the institutional adoption of tokenized real-world assets. My name is Simon Taylor. I'm your host for today, author at FinTech Brain Food and head of market dev over at Tempo. No Kai today. He'll be back on another episode, I promise you. But while he's away, we've got some incredible guests for you. Making a return is the one and only Joao Reginatto, who's Chief Strategy Officer at M0. Joao, how are you doing, sir?
I'm good. Thanks for having me back.
I always appreciate you. We've also got Mark Greenberg, who's Kraken's Global Head of Consumer. Mark, how are you doing?
I'm great. Working on some really cool products, Simon, so looking forward to the conversation today.
Yeah, you guys are doing a lot in consumer, and there's a lot this week about it, so I'm sure we'll hear more. Also joining us for a debut is Kevin Lehtiniitty, who's CEO at Borderless. Kevin, how are you doing?
It's the best day since yesterday, Simon.
It really, really is. It's the best day since yesterday, every day. But before we get into the content, I've got to remind viewers and listeners that views and opinions of contributors today are their own and might not reflect companies they represent. Please don't take anything we say as tax, legal, financial, or fashion advice. Please do your own research, folks. All right, let's kick off with a story from M0 since we have you. So I saw that M0 and it looks like MoonPay are partnering. Joao, do you want to talk a little bit about this partnership and what's happening with the M0 network with MoonPay?
Yeah, absolutely. I think for the benefit of others, right, Simon, I think we have spoken many, many times about this topic. So I'll pitch our vision of the world, and then I'll talk about what happened today, what was announced today. But I think a big trend that now I think the market is beginning to understand better, that we have seen a long time ago when I spent time at Circle before joining M0 in 2023, is that stablecoins are going to be this phenomenon, but not so much because they are products, but more because they can behave as infrastructure, right? So we have been pitching this idea that stablecoins are essentially the next banking as a service layer, if you will, and it's an objectively better one at that. So everyone who wants to build a fintech product, who wants to build some sort of a product that demand, some level of a dollar-denominated functionality inside it, they should really consider building that on top of stablecoins or customized stablecoin functionality. And we have been, trying to educate the market on that. I think if you are to buy into that vision, to buy into that thesis, then every platform solution, there's usually two paths for you to take in terms of how you build them. One is a very, vertically integrated and a more closed style of platform. Another one is a more open platform, like everything else that we see mostly on the internet, and particularly things that are built on blockchain. At M0, we believe a lot in the power of open platforms. And one of the things that we want to bring to the market is this idea that you can come in to build your application on top of a digital dollar platform, but behind the scenes, the platform is also open for any issuer to join and participate. And this week I heard from, I will steal that quote, that 2 is a data point, 3 is a trend. So I think we are entering the trend phase now, because MoonPay is now the third stablecoin issuer joining the M0 network. And the main news, I think, is actually that MoonPay is entering the stablecoin issuance space, right? So above and beyond everything that MoonPay has done for years now in terms of payment rails and crypto infrastructure support for the crypto and fintech spaces. Now they're going to enter the stablecoin issuance space as well, and a lot of it has to do with the prior acquisition that they had of Iron, right? Because it gives them a different profile, access to more institutional rails. So they're definitely tapping on all the infrastructure that they acquired as part of that deal. And then what they have announced today is, them entering the stablecoin issuance space via an integration with M0. What M0 allows an issuer like MoonPay to do, which is the same thing that happened before for Bridge and for MXON, which is the very first and smaller issuer on the network, is that these entities can come into a platform like M0, abide to certain requirements, to certain technical standards and non-technical standards, and pledge collateral in the form, that both adheres to the network, but also ticks all the regulatory requirements that those guys are under, and issue stablecoin as part of a common network, as in a more interoperable
I think
way.
that common network's key, because the Oprah meme of you get a stablecoin is great, but don't we just create a new interoperability problem? And I think you guys foresaw that and are now building that network and seeing other people issue on it as well, and sort of almost there are issuers that are issuing, selling the ability for other people to make their own stablecoins that are also part of that network, which I think is kind of really, really interesting. You created a category of issuance as a service, but also this network thing I think is really powerful. Kevin, I'm sure you get asked this a lot, but talk to me about why would a company want to create their own stablecoin versus using one that's already out there? I'm pretty sure I think I know the answer is yield, but is that the case?
I think yield is by far the number one answer. I've been working on stablecoins now for the past 9 years, which is a really long time to say stablecoins will be hot next year, and I think that's finally starting to come true. And there's an argument to be made about joining maybe consortium issued tokens as well that have a nice kind of yield sharing elements. Like I think the folks at GDN with USDG have kind of done a nice job of trying to coalesce some things here. But in general, when we think about white labeled issued stablecoins and some of the customers that we support that are white labeled stablecoin issuers, it's all about yield and it's all about more capital efficiency. Those are kind of the two things that seem to resonate the most across the market.
Phenomenal answer. Mark, your thoughts from a consumer perspective. Does it not get confusing if there's like a million different flavors of dollar?
Yeah, in a lot of ways, as someone who distributes these things to many, many users, right? We see users get confused by the balances they have on Kraken right now, right? You have 4 or 5 different stable coins that you can, that are even at the top of that list, but there's probably 10 or 15 on Kraken today and probably hundreds more coming over time as this market continues to fragment. I'm a huge fan. We're founders of Global Dollar Network and the USDG token. I'm a huge fan of a more consortium play. It frustrates me endlessly that the top stablecoins don't offer yield back to their users. That's part of why we helped create USDG. And I'm fine with interoperability, and it kind of works on chain, sort of. But I hate bridging. And even with bridging, sometimes it works, sometimes it doesn't work, sometimes it's easy, sometimes it's hard. It would be nice if we could find something that offered the yield that everybody actually wants, but simultaneously was interoperable.
Let's say, I think the two giant trends right now in terms of increasing fragmentation is everybody's issuing a stablecoin and everyone's creating a corp chain. I think like those are the two very, very fragmenting things.
That remark. No, not a corp chain. I'm going to plaster it to my forehead. It is permissionless, but I hear the fear, which is fragmentation. And do we need any more fragmentation? And at the incentive game of side that, and I think there's something instructive in what M0 is building here of like building the network behind the scenes, so that above the line there are many different business models that you can start to explore, but below the line there is this interoperability. And I think thinking that through and surprising people in 3 years' time, when everybody goes from Joao, what the heck is this M0 thing, to, oh, I get it now. That must be kind of a nice journey to kind of have gone on and move through the fragmentation. I want to move us to the next story though, because speaking of people that have been on a journey, JP Morgan has announced that their JPM coin is now going to be available on the Base network. only to their institutional customers, but this is a representation of a deposit on chain. And I think this is the first time that we've seen that in production available to customers on Base. And they're also working with DBS, the Singaporean bank, which Mark Yule knows, Singapore's huge jurisdiction in all things stablecoins, on a framework for tokenized deposit transfer interoperability across various blockchain networks. So there are these efforts now, I think, for interoperability between tokenized deposits going on chain across multiple blockchains. And I wonder how this starts to play out. According to the release, clients using JPM deposit tokens could potentially transact with those on DBS token services. So now you've got Connexus and you've got DBS token services and you've got Base in the middle. They're staying, it's baby steps, but thoughts on this, Kevin? Are we going borderless? Is this starting to happen? What did you think when you saw both of these two stories from JPM this week?
I think the shift that we're starting to see at Borderless from some of the conversations we have with the banks and the more institutional side of the market is people have had this assumption that financial institutions are going to move into stablecoin-based cross-border payments. And I think that's false. I think financial institutions are going to move into deposit token-based cross-border payments. And it's, at a high level, a very similar concept from a blockchain infrastructure standpoint, right? You have liquidity on one side, you have liquidity on the other side, and you have a blockchain that transfers the token between those liquidity venues. But the actual instrument that's being transferred, that's actually settling the underlying payment, is completely different. It's no longer a stablecoin, which for banks is incredibly capital inefficient because it needs to be fully reserved. It's now a deposit token that represents, the deposit that they have that they're able to now go lend against, generate, their normal revenue from, and all those sorts of things. And I was just having a conversation earlier today, right before this. So this is a very well-timed question, or that was a well-timed conversation, one of the two. That was the first time I've been asked point blank, hey, Borderless and this is by a member of CPN, hey, Borderless as a credibly neutral global payments network versus CPN being a Circle-issued asset global payments network, would you be open to working with tokenized deposits versus stablecoins? And would that global infrastructure with all the liquidity and on and off ramps around the world, could that be retooled into tokenized deposits? And the short answer is there's a lot of exploration that needs to be done and how exactly that would work mechanically. And thankfully, there's some people at Borderless that are far smarter than I am who can do that exploration. But I do think that's indicative of the direction that banks and financial institutions are going to go. It's actually not going to be stablecoin. It's going to be tokenized deposit.
I'm not sold on that. And I'm going to play it out for two reasons.
Yeah, let's have this argument. I want to have this argument. I've been spoiling for this fight for a while. Let's go. Let's do this.
Look, let's start with how boring is it to have another walled garden, slightly on-chain stablecoin that a tiny group of users can use. Reminds me of RWAs, for the long history of RWAs, where no one can really access them. We're running a bunch of tests. And most of those models don't work. The same reason that we've built X stocks on the tokenized equity side, permissionless for retail users, available to do all sorts of interesting infrastructure plays by companies more than the institutions that are already connected to the bank, means that you get the creativity and the openness to try things. That's really important. And also, we're moving to a world where trust for banks is less. And I think that's true for big companies and small companies and at retail. And I love the idea that I can hold my money fully reserved and earn the yield off of it and not have to worry about a bank going under, which has happened more than we'd like lately. I think that's a feature. Honestly, it's actually, even if we didn't have crypto rails and blockchain, I think if money market funds could move around, people would probably use them instead of bank accounts. And the reason they don't today is they're really hard to move around, and you need to use ACATs and all sorts of other things. So I'm expecting a world where we have significantly more focus on fully reserved assets. And actually, in a world where money can be anything on the blockchain, why do you even need to use dollars at all? Maybe you actually start using tokenized equities like the S&P 500 to move things around, or gold.
Well, there's this little thing called credit risk. But where are you at, Joao, on tokenized deposits versus team stablecoin?
Look, I think my opinion is that whatever we deem as the definition of what a bank is changing, right? And I think that's the interesting part. Like Kevin might be right, but I think that's only one direction of the story, and it's the direction of what banks are going to do about this whole topic. And actually what JP Morgan is doing in conjunction with Coinbase, you could argue that it is maybe objectively better than what they have done to date, and it's in the right direction. But the other direction, I think, is what's coming from stablecoins and stablecoin issuers in particular, who are going to become narrow banks soon. And then, which one do you prefer? As Mark said, like a very traditional bank who, quite honestly, I'm sorry to say, has no idea what they are talking about when they talk about this kind of technology, or the folks who actually dominate the technology and are now, because of regulatory clarity, coming upstream to become a bank. Like, where is this stuff going to meet, right? I think from the markets are completely different, right? The markets that are trying to be tackled are completely different. And I think different use cases will require different of these solutions, I think.
As the former banker in here, I want to pull one out for the bankers and say that I do think there's a lot of them that have an idea, but I also really, really love that idea that they're coming from two different starting points. And if you keep that in mind, then the problem they're solving is different. So the problem that stablecoin is solving is that for the excluded, for the global south, money is too expensive, too slow, and doesn't reward them nearly enough. For the bank's largest clients, the problem is slightly different, which is I have 35 different banks, each with a different login. I can't move money between them. It's closed on weekends. Can you fix this, please? And so far, the banks have said, yes, I can fix it inside my walled garden. And now they're starting to figure out how you connect one Hyperledger Besu instance to a Hyperledger Quorum instance and start to make these things interoperate with Base in the middle. And I think they're finding their way through that. And to your point, Joao, these things will come together. But, JP Morgan does what, $10 trillion a day? Stablecoins did 9 trillion adjusted last year. Stablecoins are growing at 400% year over year. So, where do these two things meet in the middle? I don't think that banks disappear. And I don't think, to Kevin's point, that tokenized deposits are either A, boring, or B, a bad idea because some people don't want banks to exist. Like, I grew up in the shadow of the financial crisis as well. Just like every millennial dad, I'm struggling to make property work, and I can see my kids potentially never climbing a property ladder as the decline of the West through the ZERP era and ZERP phenomenon. But I don't hold banks uniquely responsible, nor bank employees for that issue. But I do think that there's this fascinating question of where these things start to meet, and I'm excited to watch people try and bring the two together. I put out an idea which was like, I think they announced that they'd partnered with B2C2, which you guys will know as the market maker, and they haven't said they're going to do this. But I could imagine that if I'm an institutional client of JP Morgan, who's also got a wallet on Base, could I not take my JPM coin and see if I could swap my JPM coin for USDC, for instance, on Base? And then I've got USDC, and then I can go anywhere USDC can. And so I could imagine like a future state of this and where they could start to go. So yes, it's experimentation, but this is a 2 trillion asset financial institution with possibly the eye of Sauron of regulators around the world looking at them. They maybe have to be a little bit more conservative than others.
Fair enough. In fairness, Simon, I was a banker for most of my career too.
I feel the scar tissue, but I wanted to make the other side of the argument. That's all.
Fair enough.
I think you've got to bucket it into two, right? If we take a traditional example, Swift connects less than 9% of the world's banks. Right. I don't think a lot of people understand that the number is that small. People think of Swift as all this bank connectivity. It's less than 9%. The banks that are the JPMs, the banks that are the cities, etc. While I am originally a Bitcoin maxi and I am a giant fan of open permissionless networks, I don't see JPM settling with Deutsche Bank for trillions of dollars a day on an open permissionless network. I see that happening through tokenized deposits. If we step into the rest of the world, which is like the 91% of all the banks, it's all the fintechs, it's all the consumers, it's all those things, then stablecoins are by far a better version of fiat currency. It's fully reserved, it's auditable on chain. You don't have some of these squirrely, oops, what happened to the customer assets, right? You can go look at the wallet balances and independently verify them yourselves. You don't need to have this trust in the banks. And there's great regulatory tailwinds, right? Fully reserved asset like a stablecoin is the best way the U.S. has to buy treasuries and to export our currency around the world. I would make kind of those two buckets and those two arguments. Just to be clear, I don't think stablecoins completely go away with tokenized deposits. I think it's different products for different audiences for different purposes.
And I think the banks are trying to frame it as if the tokenized deposits obviate the irrelevance of stablecoins, and I think that's an arrogant position to take as well. Like
the bank's taking an arrogant position? Simon, never. That's never happened in the history of payments or fintech.
Hey, and guys, like as a Canadian, the only non-American I think on this call in a way, like, by the way, an access to, I guess that's right, Simon. But like, do you have access? I don't know if as someone who needs to access it from Canada and use a Canadian corp and these kind of things, the ability to access tokenized deposits in the US from JP Morgan, really hard, not easy. I need an ITIN and I need all sorts of tax documents and can't get a US bank account, so I can't access US tokenized deposits. If I'm thinking about, even my connected to Swift banks here in Canada, if I'm trying to make a payment to someone in the US, 3 or 4 banks are involved typically in that process, and fees that I actually can't even predict in advance also happen in that process. So there's going to be lots of use cases for tokenized deposits within markets, especially United States, but I don't see them as replacing some of the bigger problems we have coming up for medium-sized businesses.
I think the stablecoin genie is out of the bottle. It's going to stay there, but it does raise a bunch of questions that the bankers would object to, which is like, this is not a level playing field because as a bank, I'm subject to currency controls. As a bank, I have to make you fill in the ITIN forms. They are required to do those things. There's nothing to say. I mean, the UK has announced that there'll be an upper limit on holdings of US dollar stablecoins, which for the record, I think is crazy policy because it essentially is saying, well, we don't want GBP to play a role in the on-chain FX market, and we're trying to push back against dollarization of the UK, which it just doesn't make sense. This is the FX hub for the world. That aside, you already see Europe in particular reverting to a sort of defensive position against the dollar and dollarization. There are a bunch of global south countries that are trying to pass laws to prevent backdoor dollarization. And then there's not only that, there's tax law. So essentially, if you go around taxes, if you go around anti-money laundering rules, if you go around currency controls, then sure, money gets a lot less frictionless, but the banks will say, well, I have to follow those rules, but stablecoins don't. So where's the meeting in the middle of this? I think there are some gnarly questions that stablecoins will have to start answering at some point in the near future. I want to pull us to the next story because it's somewhat consumer centric, and Mark, I'm particularly interested in your view on this. I don't know if you saw that Cash App has just announced they're going to support stablecoins in early 2026. Their 58 million domestic users will be able to send and receive stablecoins directly in the app. So every single user will get a blockchain address. Stablecoins sent to that address automatically convert to dollars, but dollars sent out can convert to stablecoins on chain so that you can get outwardly from there. So Mark, your thoughts on this and your experiences in building for consumer at Kraken as well.
I love it. The more we make stablecoins default behind the scenes in all types of apps that move money, the better. The more easily they're interoperable, the more money can move around. And I like the idea. We're also talking about this a lot at Kraken right now, especially on the consumer side of like, how do you make stablecoins and fiat more interoperable, less obvious to users, more just something that you can take out in fiat, you can take out in USDC or USDG or USDT or, the 300 more we're going to get, GPM coin maybe at some point. And I look forward to more folks continuing to build their apps with that in mind. It'll be easier for users, and it'll also continue to drive the adoption behind the scenes, even if you don't really notice that you're using stablecoins.
Joao, thoughts?
Yeah, I think Simon, you might have posted something, right? So I haven't seen Miles Sutter from the Cash App team say this, but if he said it, I believe it because I spoke to him a few times in the past, and it's exactly the vision that I have, having built some fintechs. I think it was something along the lines that, if we were to rebuild the Cash App product today, we would build it on top of stablecoins. And again, it goes back to my previous point. Stablecoin is infrastructure, I think, and infrastructure has to be customized, and you have to have your own kind of piece on top of it. So it's not, I think people are getting confused about this idea of, having 1,000 stablecoins. Think of it as more like having 1,000 AWS instances. Yeah. You will need these things, and that's how people end up going to build these products. I think this is a first step, and I'm excited to see a product as large as the Cash App, again, joining the fray. And I think this is only one more in a long list that we have seen and will see. But I think in the future, this will still look different from a UX point of view, right? I think this differentiation of, I have a dollar balance, I have a stablecoin balance, or I'm sending dollars and I'm sending stablecoins. Users shouldn't care about that. We're getting on the way of the best user experience here. Eventually, we'll coalesce around something that looks and feels much better. And I do think, and it has precisely all the questions you've asked previously, right, Simon? Is it even fair? Is it a level playing field? But think of it from the perspective of somebody who is now encouraged to build a new Cash App product. The speed that they can move, the money that they need to invest to build that product is significantly less than what a product like the Cash App, has taken years and years to get to this point. And I think that's what we're really excited about, is this accelerant, this, gas that you throw on that fire when you have this new type of infrastructure for those kinds of products.
My wild idea is that we get to call any Genius compliant stablecoins USD, and we just drop the prefix and the suffix, and then anything else with a prefix and a suffix is some form of collateral, some other form of something that might be trying to hold its value to the dollar. But if it's a delta neutral hedge, for instance, or if it's backed with other forms of collateral, unless it's inside a Genius, or maybe there's some other way you could do it and that you just get to start to call it USD. Then that would simplify things. I think there's a branding issue here for stablecoins coming up. Kevin, your thoughts on the Cash App piece?
I really like what Mark said. Our mission has always been to make on-chain money globally interoperable with off-chain money all over the world. I think it's a great kind of yin and yang to some of the great work that Joao and M0 are doing with making on-chain money interoperable with other forms of on-chain money. I think both these pieces come together really interestingly. And we've got a fairly significant kind of customer segment now around these stablecoin neobanks and stablecoin ARAP platforms, things of that nature. And the pace at which their volumes are growing is quite staggering. So there's very much a case to be said that, look, if you're building the next Cash App or you're building the next neobank, stablecoins are in fact the right infrastructure to do that. And stablecoins are the right infrastructure in order to be able to build a global first product and to do it in a way where the balance sheet makes sense for a startup, right? You don't have to be a Remitly that's got to finance $300 million worth of cash to now go and deploy in these pre-funded accounts that you've got to borrow on a Friday to be able to pre-fund through a weekend and all those things. You can now actually move your dollars 24/7 around the world to on and off ramps and other liquidity sources. So maybe that doesn't go to zero, but it's really hard to finance $300 million. It's really easy to finance $10 million as an example, and much, much more cost effective.
Indeed. All right, well, that's about all the time we have because I need to thank our sponsors, and we'll be back for part 2 in just a second. This episode, if it isn't already obvious, is sponsored by our friends at Visa, the leader in digital payments. Visa's Tokenized Asset Platform, or VTAP, uses smart contracts and cryptography to help banks bring fiat currencies on-chain, whether it's launching a stablecoin or deposit tokens or something else. VTAP allows financial institutions to issue fiat-backed tokens, improving financial efficiency and enabling programmable finance. Check out the links in this episode's description to express your interest in VTAP. This episode is sponsored by Stripe. Here's a problem so many businesses are up against. Money still moves like it's the 1970s on financial infrastructure that was designed before the internet was even a concept. It's slow, it's expensive, and it's tied to borders. That's all changing now. Stablecoins are fundamentally a better way to move money online. They're affordable with payments that take minutes rather than days. They work across borders, and they're easy for anyone to use, no matter where they are in the world. Stripe allows you to unlock those benefits for your business. One integration, and you can accept stablecoin payments, pay out globally, and manage your money with stablecoins. No blockchain expertise required. Learn more about how you can use stablecoins and expand your reach at stripe.com/crypto. Fireblocks is the stablecoin infrastructure of choice for global businesses, from Visa to WorldPay to Bridge to Revolut. With over $100 billion in monthly stablecoin volume, Fireblocks powers stablecoin strategies at scale with infrastructure that enables PSPs, fintechs, remitters, and banks to issue, move, hold, and manage stablecoins. It's all done securely at scale with secure built-in compliance. With Fireblocks, you get complete control to build your own stablecoin orchestration layer, create payment accounts, manage liquidity, and access on and off ramps in over 60 currencies. It makes it easier for you to build and scale and expand your business globally. Learn more at fireblocks.com. Thank you to our sponsors. Next story was Circle are unveiling an on-chain FX engine, and they're also announcing that they've considered an ARC native token, ARC being their layer 1 blockchain. So StableFX and Circle partner stablecoins are live on the ARC testnet in an attempt to create a unified infrastructure stack for institutional FX activity. So 8 regional stablecoin issuers gain integration to Circle's payment network. That means they're trying to go beyond domestic markets. And this all came out during their earnings, that they said they're considering a native token for the ARC stablecoin chain, with over 100 companies launching on the ARC testnet. Joao, I know this is your alma mater. I know you still got lots of friends over at Circle. What are your thoughts on the FX dynamic in stablecoins, and certainly the institutional side of FX? Is that something you've looked at? And did you have any thoughts on this announcement? And if you had a chance to look at it?
Yeah, no, I'm very happy for the team to be publicizing some of this progress. I can tell from even my time at Circle, we're very passionate about the FX use case. There's so much opportunity there. Rachel Mayer, who is now in charge of the ARC project at Circle, she comes from an FX background, so I can tell you that they're going to be very biased for trying to figure that out. There's a lot of challenges with FX, right? And I think we at Circle, in my time at Circle, we issued Eurocoin as well. And there was kind of at one point a roadmap for, many currencies that Circle could issue, many stablecoins in many different denominations. But it gets complicated and expensive to work on, one by one and distribution by distribution. I think eventually it sounds like now, looking from the outside in over the last couple of years, that Circle went towards a more kind of again platform approach, right? Let's welcome issuers of stablecoins in other denominations. Let's try to enshrine a few, or maybe have them compete in this platform. The main thing that is important for a platform like CPN is to standardize the access and the quality of those instruments, and then facilitate liquidity, because liquidity is going to be the thing that makes or breaks this kind of solution, right? FX demands very specific liquidity profiles, particularly if it is for institutional use case. I mean, these movements are huge. You talked about the trillions, right? FX markets trade trillions on a day. So I think that's going to be interesting to see. I don't know how the team is going to square that problem out. But I'm excited for them to try, because I think there are so many use cases that Circle and USDC are already facilitating that are cross-border, that are going to benefit from the final leg or the initial leg of these transactions also being on-chain.
Yeah, it'd be fascinating to watch. I think I did some digging with some folks in the payment space, and the best numbers I could get to is that most financial institutions are able to sell, to their biggest customers, FX at 1 to 3 basis points, and that's a 99% margin. So an improvement of efficiency on that, stablecoins have a high bar. Now, if you're not a big institution, you're getting your face ripped off with FX, and that seems like insanely cheap. So stablecoins obviously have some product market fit for people who aren't deep in FX or people who haven't gone all the way down the rabbit hole to figure out how they can really get that much more efficient. So there's kind of this interesting middle ground of like, okay, so who's hurting on FX? But you look at the rates Wise can offer from the work they've done, and even somebody like that, their volumes would dwarf what you see in stablecoins today. So the liquidity point is going to be really, really crucial. Kevin, have you given any thought to the FX component and where liquidity comes from?
We think the opportunity exists in SMB and mid-market for sure, not on kind of high-end institutional. Like as a great example, if you call, Citi and you want to do an FX trade there, the trade size starts at $1 billion. If you're not at least trading $1 billion in that clip, they don't take the phone call. And when you have that level of volume, that's where you're seeing a basis point. That's where you're seeing super tight margins. So this narrative of stablecoin FX as better, faster, cheaper starts to break down there. And that's the scale of like the MasterCard moves, the Airwall X's, the Cities, the JPMs, etc. But to the point you made, if you're not in that ball game, you're getting your face ripped off. And it's going to be the PSPs, it's going to be the fintechs, it's going to be the mid-market segment. Those are the people that are paying 10, 20, 30, 40 basis points on FX. It's the retail consumers who go to the ATM machine when they're traveling and the ATM says, do you want to accept this price? It's only a 19% FX fee. Those are where the cost optimizations are that can benefit from what stablecoins really offer, which is retail distribution to the masses in a very simple way. That's, I think, the much bigger opportunity versus saying, oh, we're going to build a better FX desk than Citi, because quite frankly, the volumes are massive and there's not a lot of room for price improvement, right? From 1 BIP to half a BIP, but okay.
Yeah, and even then, all you're doing is eating their margin, which is already massive. Mark, your thoughts on this story and Circle in general?
Yeah, stablecoin adoption in a much bigger way comes down to us having viable stablecoins in other currencies, because we're still in a place where you need most of what you're taking in and out as mint burn is probably into your local currency, because that's where you're holding it in the bank, etc. To do that, we're going to need to have better FX markets on stablecoins, and it makes it much easier if I don't have to when we're transacting with, say, Brazil, that I don't have to move the USDC, convert it in US dollars, then convert it into local currency. It's much easier if we can do that with stablecoins. And I do think that middle market is the sweet spot. Right now, even for a Wise or otherwise, there's a lot of logistics required for them to be able to offer the rates that they do. And we can continue to bring efficiency to that and then bring the kind of, 1 to 5 bips, whatever that number is, to all users. That gets really exciting. And so I think that's where Circle is heading, and actually others as well. And I get really pumped for that. But it's going to take some time, and it really comes down to maturity of stablecoins and other currencies, which is slowly coming, but not necessarily quite there yet.
Joao, how do we unlock that? How do we get non-USD stables? Is it just that the demand for the dollar is the thing and the dollar is the product? Or is there some other impediment that's kind of really holding this back?
Yeah, I spent a lot of time thinking about that. I think the analogy that I have mentioned to some people was that we got to stop. Not that we got to stop. I wouldn't phrase it like that. We have to have more people working on use cases that actually leverage stablecoins, more utility, because otherwise this looks a lot like the beginning of digital photography, where there was no application for digital photography, and then what people would do is they would go to a kiosk in a mall somewhere in the world to kind of download and print them out, right? And that would be the utility, because then I could show it to a friend or a family member. I think we're still doing a lot of that with stablecoins when it comes to cross-border use cases. I have argued with a lot of folks that I'm not a big fan of the stablecoin sandwich pattern. I actually think there's a lot of hidden costs in there, but I think it's actually objectively worse than a product like a TransferWise of the world. When you actually dig down to the details of cost and balance sheet and who's using what, I think what you need is the ability to continue on this digital transfer, all the way from the beginning of the leg to the end of the leg. And that will require more utility for stablecoins on either side of this transaction. Only when we get there, And as I said, as a digital photography analogy, when people don't have to download and print it on the other end, will the liquidity profile like have a step increase? And I think we're going there. In some of these corridors, we already see some of this happening. Mark mentioned Brazil. There's a lot happening in Brazil with the use of stablecoins. Mexico is another good country, but it will take time. I think this is something we're not going to see next year still.
Time for this to grow. All right. Well, next story was about somebody that's been close to that on-off ramp for a little while. Coinbase, they've launched a platform for digital token offerings, but they also launched a UK-based sort of savings account. So the savings account will be instant access, and you can add and withdraw money at any time. It's 3.75% AER, which is sort of middle of the pack for the UK, better than the banks, but not the most aggressive rate. Interesting that they're doing that in the UK. But their token offering platform is going to involve its first token sale on November 17th for Monad, in part with their mainnet launch. And this follows 3 weeks ago, Coinbase bought Echo, the fundraising platform launched by crypto trader Kobe. And this week they launched those retail token sales. So they've kind of gone full stack on this token sales space, direct to consumer. Mark, do you think there's demand from Coinbase customers for access to these token sales? And are there challenges with them understanding it? Are there challenges around consumer harm? What are your thoughts?
Yeah, so first, we've done a number of these on our platform at Kraken as well, mostly outside the US to date, and have seen demand that far outstripped our expectations, actually. Lots of folks interested to get in on platforms like the Pump.Fund token and other pieces where we've been a part. So the demand is there. And at the same time, I think the excitement from the other side around easier access to liquidity, the ability to distribute your tokens to retail and not have to go many layers to do that, to be able to offer tokens globally around the world as you raise liquidity, I think is quite exciting. Rules still to be figured out, a lot of risk associated with doing it in the United States right now, though most tokens aren't securities and probably don't follow securities rules. And so maybe it's fine. Again, I think more to figure out there. Excited to continue to see these kinds of things and folks to use tokens as a way to raise liquidity for amazing projects that they're working on and get easier access from retail into those projects earlier.
I feel so conflicted about this one, Kevin, that like on one hand, I'm definitely there for the fact that consumers have been largely locked out from value creation for the past 2 decades and not really benefited from price appreciation. On the other hand, I worry about whenever we're democratizing something where it's also institutions dumping their bags on retail. And like, how do we find that line? How do you think about these things?
Look, this is certainly not my area of expertise. I'm much more of a stablecoin person than I'm a token person. So perhaps with that disclosure, I will offer some very dumb thoughts, but my thoughts are generally dumb, but these should be considered like extra dumb thoughts. I think
one heck of a caveat.
People love to speculate and people love to gamble. I think that's a pretty indisputable fact. I mean, look at Fartcoin as an example of things that just objectively should go nowhere that somehow do. And if I'm thinking from a Coinbase perspective, the core business there is speculating on tokens. So you can either increase breadth by increasing the amount of users that are doing the speculation, or you can increase breadth by increasing the amount of assets that can be speculated on. And creating a kind of token launch platform seems like a great way to increase the amount of tokens that people can speculate on and maybe take some market share back from the Pump.Funds and the meme coin trading platforms that have started to become a very, very popular form of gambling. But from a consumer protection standpoint, like my general advice, if my mom would call me, would be to just not touch that world.
Yeah. No, and we're in a world of prediction markets as well, where Robinhood is becoming one of the biggest distributors for Kalshi, and sports are the biggest prediction market kind of out there. So there's something to be said for that. But at the same time, what I found interesting about this is the amount of disclosures in the Monad ICO. It looks very different to the ICO boom of 2017, and there's also the fact that largely amongst the VC class, it's considered that the IPO market is broken, and that capital formation through SPACs isn't a lot better, that the bankers do very well, but entrepreneurs and companies get sort of left behind in this process. So there is a need for a new form of capital formation, but there's going to be something along the way. But the UK announcement is an interesting one about the savings account as well. Coinbase pushing quite hard at the UK at the moment, and definitely trying to become that everything bank and institution. As a fintech nerd, I look at this and sort of say, Coinbase versus Robinhood in the US, we could be in a Coinbase versus Revolut in Europe and the UK kind of two-horse race. Joao, any thoughts on these two stories?
Not a lot. I'm more on Kevin's camp that, I have done my share of speculation in crypto in the last 10 years, and I'm sort of past that. But I do think the Echo platform that Kobe has built was a really, really interesting thing. I think I have seen, I'm always in touch with a lot of early stage teams that are, in the process of raising. And I think there was a lot of teams that started to consider, raising traditional VC funding and then having like a portion of their raise that was being done on Echo, right? And I think that was really, really interesting because it allowed people access to really, really early stage opportunities, right? I wouldn't say like regular retail, but folks who wouldn't have like access to this. Now Monad is different, right? Because Monad it's pretty late stage as far as like the cap table is concerned. So there is an argument that are we opening this up to retail when it's already too late? And then, what sort of profile of outcome are we going to see here? I hope like we find a middle ground because of the Echo acquisition, and I'm sure they're going to experiment with the projects going forward. So that's my perspective on that. But in general, I tend to be passionate about this idea that we need to balance better consumer protection with giving people access to these things. As you said, Simon, right? Are people going to be able to get on the property ladder in the current generation in the way that we maybe did? Probably not. So, let's give them at least the ability to build a ChatGPT based investment model and speculate a little bit on these early projects, because maybe that's going to be the thing that transforms their life. So I'm willing to explore a little bit on that, I would say.
I always want to make sure that we balance disclosure with giving access. And if we were on a podcast 10 years ago on the topic of Bitcoin, you probably would have heard much of the same thing.
That's fair.
Risky speculation, just a game, kind of silly. That's been proven wrong with history and or into the future. And I think that's the risk of us making choices on behalf of end users today as well. And I just want to, I think that's something important to keep in mind, is that some things that look like funny speculation plays are actually really strong investments, and others won't be. And it's up to users, I think, to be able to make that choice as long as they understand the choice that they're making. And I hope over time that there's less gatekeeping of that and less like Big Brother, we know what's best for you, and more make sure you do your research.
Yeah, it's always the ones that don't do their research that get harmed, and I think that so if Big Brother's not going to do it, who's the little brother? What are the things? Because financial education doesn't work, and I do think there's something to be said for that. But yeah, I mean, I've been in the position a few times of trying to build consumer warnings for fraud prevention on push payments. Like, is this a scam? Are you really sure it's not a scam? We kind of think it's a scam. Like, here's a giant red sign saying like, are you sure you want to send this? Are you sure you're sure? But I can't stop you. And I think that's ultimately the kind of the position that business can only do so much to quote unquote help its consumers make the right call. Eventually it's their call. So you kind of get to that space. And to your point about like the Overton window on crypto has shifted. The last story I was going to cover off this week very briefly is SoFi has now announced they've become the first nationally chartered US bank to launch in-app crypto trading. I do believe some people have done this through partnership. I think PNC's done it through partnership with Coinbase and others, but that's sort of a white label version of Coinbase. It's not something they're doing themselves. So SoFi users can now trade BTC, ETH, and Solana. And this is a bank with 12.6 million users. They're also planning a SoFi USD by the middle of next year. And they've had Lightning Network remittances live with Lightspark since August. So thoughts on that, Mark?
Yeah, probably a little bit overdue, maybe is the way I'd say it. I think it's exciting. Again, it's actually the same point as the Cash App one. The more users who have access to these things and the apps are already using, the more they will use it, the more adoption will continue to grow. So it's a win for the industry. It's also something that I think more and more users just want by default. The ability to trade in crypto has just become a default portion of many, especially younger folks, investment portfolios. And so it's something you need to offer and need to have access to. And I think SoFi is just another example of more and more banks and investment firms around the world adding crypto. We're talking through our embed product about embedding Kraken crypto trading into probably hundreds of different banks around the world at this exact moment. So expect that to become the norm far more than the exception over the year to come.
Yeah, they always show those stats of like 70% of customers would prefer if their bank offered it because they want the logo, but the bank has no idea how to offer it. So they're going to come to somebody like Kraken, Coinbase, Bitstamp, somebody to help them get that done. And finally, this Lightspark keeps popping up and surprising me. Kevin, your thoughts on that? Because it seemed historically somewhat maxi on the Bitcoin side, but as somebody who's gone from the maxi to stablecoin transition, your thoughts on where Lightspark might meet in the middle?
This is a great question because I actually had the chance to spend some time with SoFi's CEO a few weeks ago at the Lightspark Summit. So that kind of brings all these different parts of the story together. And it was interesting building on what Mark said is he had shared how many of these products SoFi was planning to release years ago. And then as a nationally chartered bank, they got a very sternly worded letter under the previous administration kind of shaking their fingers saying, no, you're not going to do this. And then all those products got shelved. And now I think the reason why these are coming out kind of better late than never is because of the administrative and regulatory changes now allow them to come out. But if they had had their way, buy, sell, hold within SoFi would have been a product 3-4 years ago. I think what Lightspark is doing is very interesting because they're offering, especially to SoFi, a stablecoin sandwich product, but it's a Bitcoin sandwich product, which is a very different flavor, right? So SoFi, as an example, will send Lightspark USD. That USD gets flipped into BTC. That BTC then gets transferred to Bitso. Bitso flips that BTC into MXN, and then through SPAY transfers it out to the recipient. So this US to MXN remittance corridor is not even a stablecoin sandwich, it's the Bitcoin sandwich. And the question is then, well, why is Bitcoin the intermediary asset versus USD on chain? And I think a lot of that is certainly the maxi ethos, but a lot of that is the where do you have the most liquidity in terms of digital assets in the world? Yes, Bitcoin isn't a stablecoin, but Bitcoin does have the deepest liquidity globally of any asset, more so than most stablecoins. So if you're really pushing into emerging markets and you really believe in this permissionless open network world, and you think it's not about currency, you think it's about liquidity, then the bet's pretty clear and it's Bitcoin. Now, that said, there's a lot of stablecoin things that are coming towards that stack, and we're, fortunate to count them as a fairly close partner to some things that we're building together. But expect that worlds to collide with the stablecoin world in some fairly meaningful ways soon.
It's a few times in the past year I've heard people describe Bitcoin as at least the crypto native, high quality liquid asset. And for the global south, it is a high quality liquid asset. And, 10 years ago, I would have been laughed at for saying that inside of a bank. And, the risk-free asset was T-bills. Doesn't look so risk-free anymore. And so, the times they are changing. Where will we be in another decade? I'll certainly have a lot more gray hair on my beard, that's for sure. But I won't be because of conversations like this. I've really enjoyed the show, guys. If people want to find out more about what you're doing, Mark, where do they go to learn more about you and Kraken and everything you're building?
Kraken.com, lots and lots of cool stuff coming on there, and find us on, all the normal places.
And Kevin, you and Borderless?
It's borderless.xyz.
And M0, and of course, Joao.
You can go to m0.org, or we're pretty active on X. You can go to x.com/m0.
Phenomenal. You'll find me at SY Taylor on all of the socials, screaming into the void over at fintechbrainfood.com, and on tempo.xyz as well. If you haven't already, I'm going to do that host thing and ask you to subscribe, like buttons. If you see a button, hit it, reviews, 5 stars, whatever you can do helps this show go a little bit more viral, and do one good deed for the day. Tell somebody else to listen to. Thank you very much, and we'll catch you next time.